This is Nirav, and let me just check the audio at my end before we get started with the actual content here. Hello, mic test, mic test, mic test. Hello, mic test, mic. Okay, so looks like the audio is working fine at our end. So let me just quickly switch. Let me see where we are. So let's get started with the regular disclaimer here, suggesting that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit loss or loss of profit. With the legalities out of the way, let me just quickly run down a quick introduction. So, guys, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis YouTube channel, as well as 50eyes.com website, where I've been publishing my research for long time. Since 2015 the channel exists. And one second, yes. So, and as I was saying, I'm broadcasting this webinar currently live on YouTube as well as LinkedIn. This will be the 76th edition. Generally we go live at 7:30 p.m. IST or 2 p.m. GMT. But today we are running almost 20 plus minutes late. So you can catch us on Friday. This is our general time. Apart from all this, I'm also the author of the book Think with the Markets, and have been giving a track record of all the analysis and forecasts which I have done over the years, which can be checked by visiting my website 50s.com/forecast test accuracy, and you can check all the spreadsheets. It will take a little bit of time to load up. Yeah, there they are: 2016, 2017, 87.5, 88.4.61, etc., etc. You get the point. And in this series of webinars called Trading Opportunities, we have already caught 107 big trades, which were all discussed live in these webinars by the 74th webinar. What happened in the 75th or the last webinar we will discuss today. Right, with that being said, let's now head over to the actual content. And lastly, before we proceed, the general way we will proceed is first I'll discuss the chart of Euro USD, followed by crude, gold, S&P, and Nifty. Right, with that being said, let's now head over and quickly look at the first chart, which is the chart of Euro USD right here on screen. Now the chart of Euro USD has been a little bit what do you call less decisive, or it's not the proper word. I should say a little bit of what you call unclear chart. And why am I saying that? See, previously we were thinking that as I was saying, we were thinking that this market has gone and sustained a little bit below this white trend line. Let me just zoom in. Yeah, this is the important BD white trend line which I was discussing in the last webinar, and because this market had gone below it, I was considering bearish biases as a likely possibility. However, for that to happen, this market should again go back below it and break these levels. I think we have an alert here at 1.09257. Nothing like this has happened. Instead, this market has gone up above and sort of established a support here. So, long story short, if I just draw this trend line again and remove everything, now the problem is that this movement is not that much intense or that huge below the trend line, and this movement up is suggesting that maybe this market is establishing a support above the trend line. So, long story short, either it's taking a support above the trend line here, or this is just a false move to trap some longs before the market washes them out. So there really isn't a clear conclusion here. So what I've done is I've just placed alerts on both ends, and I'm more interested in selling short if the market goes below the last low, which is around 1.09128. Just check it on your chart. I'm using this data feed, so your data feed will give a little bit different level. So, anyways, long story short is I'm more interested in taking shorts if the market takes out the low. Upside, it does exist, and if the market goes above 1.106, then I will look to consider it, but I'm not very sure about it. It's not a confirmation as of yet. So, more biased towards the bearish side, and wait for the alert level to get triggered for considering any shorts. That's about it for euro. I don't think there is much to add in this case. It's more or less a wait and watch, which seemingly seems to be the case with crude oil as well. Let's just quickly check that chart as well. So in crude oil, I was able to catch some longs here. The bias was that this was a wave 4, and when alert would take out the high, or when the market would take out the high, I should say, then I'll be interesting some bullish movement. So last when we discussed it on 4th, was it 4th? Yeah, that was 4th. It was on 4th of August. So on the 4th of August, there was also the hypothesis. It was the hypothesis that we will be looking to consider more bullish movement, but this light down suggested that we may be proceeding as a triangle. Eventually, it became clear that we were proceeding as a flat structure. So, leaving the past to the past, if you were in the discussion when we discussed last, you would have noticed that we did project out the target of 83.85, which was actually achieved. So now coming back to what this market might be doing right now, we are assuming that this is the 4 complete. Now, in which case we can also say that this is a wave 1 up, 2 down, 3 up, 4 down, and 5 up, basically suggesting a expanding diagonal structure, which would suggest that this 5 is possibly complete, and which will open this market to much more downside, right? So this is just one of the two hypotheses. The second hypothesis is, of course, that this wave 5 is continuing. There are multiple ways we can count it as continuing, but simply speaking, with what we have on chart, it could be a diagonal moving to the upward direction. It could also be taken as a nested formation where this is your wave 1 up, this is your wave 2 down. So upside cannot be relegated as of yet. We do have some ideas on how to get more clarity on that. Firstly, in the 50-60 zone, we are at 82.41, 81.85. So within this zone, if the market comes in and then reverses wherever, somewhere here, if it comes back within this zone and takes support near the lower level and then reverses, then we will say that the bullish bias is getting stronger. Of course, at that point, we will look to move the alert a little bit lower, depending on the price action. But long story short, if the market takes support here and then tries to test the high, then I'll be interested in longs. And the count, as I just discussed, would be this. Second count, as I discussed already, would be a possible ending diagonal, but doesn't really matter. Both cases, we are looking for the market to take out the high and give at least two legs up as a wave 3 and then a wave 5. So it sort of remains the same. So in crude oil, that's my bias for upside. Wait for a reversal between this mentioned level. And if we do see a reversal, then I'll consider taking longs. On the contrary side, if the market does go below this level and sustains below it, then I will look to consider shorts, but there is no confirmation yet. A technical confirmation, you can say, will come below 80 level, right? But as you can see, it is far lower. Currently, the market is trading around 83.35. So 80 level, while technically it is correct, but it is not practically tradable. The risk will be very big. So I'll consider that when the market gives more price action and possibly more clarity. So that's about it for my take on crude oil. Let's see gold now. The gold also is having two possibilities. Things are not very clear right now, I should say, other than S&P, where I think we have a better chance of finding a trade comparatively. See, yeah, so this is the main theme I want to discuss first of all here. So, firstly, what I think might be happening here is, let me remove everything here. If first of all I should consider that this was a starting point or point of reference, and then consider that we have a 5 wave down movement, let's just call that an A, then we can further consider that we may be progressing inside a B. Secondly, we can also say that maybe the B is complete here at the high around the price level of 1987, and that is the count we are going to discuss right now on screen. So if we assume that the A is complete here and the B is complete around 1987.53 something, then it does look like we may have a leading diagonal at hand. Once the leading diagonal is complete, which actually is complete as per my understanding, might be a slight downward movement remaining, but what I'll consider is that this is, let's say, the first wave down of the leading diagonal, which should be followed by second wave, and that should eventually give us a better trade in the downward direction for the wave 3. So this is the main theme, or let's just say the primary hypothesis on gold, that perhaps we are inside a zigzag correction. And those of you not much familiar with Elliott Wave terminology, let me just quickly show what a zigzag is with this yellow color. So in a zigzag correction, we are basically looking for a 3 wave movement. The first leg down is called an A, correction is called a B, and then another leg down is called a C. So in this case, we have already completed the B, and we are looking for the C down. So as you can see, the C down will take out the wave is low. So basically, it should take out this level, which is coming around the price of 1892.71, which will be our target minimum 1892.71. So that's the first take on gold. Let me see. There is the second take here. It is suggesting that this market is strongly bearish and is already inside the C wave. Within the C wave, it is currently forming the wave 3. Let me just explain what I'm saying. So this analysis suggests that the C wave has already started. And since we know that Elliott wave movements will have 5 waves inside of them, impulses and diagonals. So in this case, the C wave, if we expand it, it should look something like this, or the internals of the C wave should look something like this in yellow color. And we can label them as, let's say, 1, a 2, and so on and so forth. So if we compare this structure with the actual chart, we find that this is the start of, this is the end of B, so the start of C. And this is the wave 1 over here, which I was showing roughly here. 2 here, and so on and so forth. We will have a 3 down, which is still under formation. So that is a possibility which is definitely there, but it is again suggesting downward movement. So it is more or less bearish bias on gold. One more point worth adding. This B wave might be continuing right now. It actually looks like it is. So it can go a little bit up and even take out the high of 1930, right? So roughly speaking, we are expecting something like this kind of movement. The B can extend a little bit more, but generally speaking, it will close a little bit above the last high or a little bit below the last high. This high I'm suggesting, 1930. So this is the expected progression on gold. Of course, I'll wait for clarity and see how things proceed. By the way, I was short multiple times on gold, and I was able to capture part of this leg down, etc., etc. And last position was stop loss hit because my stop loss was very small, somewhere here, 1920. But overall, we have captured a good enough movement on gold. And if you guys are not aware, I'm also posting my analysis in my Slack private group live. All the trades are posted, as you can see roughly here, with commentary and chart links, and my trade entries and exits as well are posted here. In case there it is, for instance, I did shorts, I did more shorts, etc., etc. So in case you are interested in the same, you can just contact me via my website 50s.com/contact us. It is still request only. You can type in the subject matter as requesting details for private Slack group access, and I'll get back to you. So with that being said, let's now head over to next chart. The next chart will be the chart of S&P's 500. Let's see if we can find a better opportunity here. This is the main, not really the main, but yeah, one of the two counts which I am following on this counter right now. Actually, both are valid. So let me just discuss one count here and keep things simple, because all the counts I've discussed this time were quite complex, and I don't think the general audience will be able to grasp them. So now let me tell you what the general theme I think is with this counter. Let's take this point of reference here. Price is 4611. From this point of reference, what this count is suggesting is that we have a diagonal in the downward direction. Diagonal was completed over here, and this market is now progressing as a B, either complete or B, continuing. In either case, what it is suggesting is downward movement. And why is this the main theme still? Because, as you know, we have already touched the 23.6 retracement and then crossed it to the downside. Now the second target which comes after 23.6 retracement is the 38.2 retracement level. And there we are at the 38.2 retracement level. Still not touched, and the price level is at 4418, let's say. So if the market really is inside a wave 4 and it has already touched the 23.6 as we see, then it is very likely that it will now proceed towards the next level, 4418. So that's why my current bias is still bearish. Second thing that can be happening is that in case this market does not want to go lower and touch the 4418 bias, 4418 target, then we can assume that this market has already completed the correction here. This is the second count. I will not go in detail so as not to confuse the general audience, but the second count suggests that this whole correction may have completed here. And of course, there is no confirmation for it. So we will wait for the market to take out a significant level. 4520 at this point in time is a significant level, as you can see. Resistance, 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 resistance. So my personal bias remains bearish until proven otherwise. My trade setup remains that the market can go up and then down. So I will be tracking. Displays the wrong alert. So I'll be tracking this leg towards the upward direction, and then we'll look to enter shorts once we have a confirm. Again, I've entered wrong. So as I was saying, I'll just wait for the market to continue in this upward progression as represented by this green line. And once the market has done that and starts to reverse, then I'll look to consider selling opportunities on this counter. Likewise, you can also say that this is a swing short opportunity, but as I said, there is no confirmation for the downside as well. Only I am biased towards the downside. Confirmation would be something like this market completing this flat correction, which I'm expecting is progressing right now. Hence, once this wave C of the flat is complete, the technical level will be that if the market takes 4443 to the downside, we will enter shorts, which is basically the low. But we all know very well that if the market completely gives us a clear structure like a five-way structure, then we have multiple different ways of adding shorts, and the simplest being wave too low. Again, these are a little bit aggressive methods, but they will give us a better risk to reward and a quicker entry. So long story short, S&P is 500. We wait for selling opportunities, and the progression is this. Something like this is what I expect. Next, let's see Nifty. So on the chart of Nifty, what I was discussing last time was that this market may be still inside a bearish progression, and I mentioned it very, very, very clearly in the last webinar, which was done on 4th of August. Where is that? Yeah, somewhere here. So I mentioned it very clearly that this market can go a little bit above and below the green trend line, but overall, if it does not sustain above this trend line, let me just draw it here. Now you can see it. Now overall, if it cannot sustain above this trend line, then this is bearish, and I'll look for selling opportunities in that case, which is exactly what has been happening so far. And what I think, we may have two possibilities here. Firstly, that this was all temporary, that this market is establishing or remaining below the trend line. What may be happening here is that this is your wave one up and this is your two down, and there is going to be this next leg up for the wave three, right? That's just one thing. But as I said very clearly, that if the market does not sustain above the trend line, it is best to consider the bearish scenario and take short-term selling opportunities. Now, as we can see here, market since where is this? 8th August, 9th August, 10th August, 11th August, 4 consecutive trading sessions it has given very good intraday selling opportunities. So this is by far quite enough for me. Furthermore, what I'm looking to do is, let me just show the actual count and show you. Furthermore, if the market is still continuing to go downwards, then I like to observe it in the Monday session opening for a bit of time, and then decide if I want to take shorts as per this count. As you can see, in this case, I'm assuming that this is the point of reference at the price level, around the price level of 19646, and we are currently inside a wave one, which will be followed by a correction up. So that's why I'm saying on Monday I would like to observe how this correction comes out to be, and then decide when to enter shorts if I want to enter shorts. If the correction becomes extended and a little bit more than what we wanted to see for a wave two, then that would suggest that maybe the bearish count is not the one which is working out. So Nifty is sort of a wait and watch. The only real confirmation which I have is for the upside, and the technical level will be if the market goes above, what is this, 19622. If the market goes above this resistance zone, then we can say that this market is going for new highs, right? So as long as that level is not hit on the downside, we currently do not have a confirmation. We will have to wait in the actual session and see how things proceed. That's about it for this counter, and let's quickly have a look on the last chart here. Now BTC has not been giving very clear movements. I have sort of redid the count here, but let me just give you a quick idea of what I'm thinking here. Now this is not a very convincing count, and I've tried to count it in many ways. It has not given a very clear count since whatever this is, price of 30769 and date of around 15th August. Now, what I think might be happening is from this point of reference around what is this 20 30, sorry 31026, we may be having a down, a B up, and then this is possibly a C down. I'm currently assuming it as a diagonal structure, the C basically. But then again, inside a diagonal, this is sort of an odd price movement for the prices to go take out the trend line and then sustain below it for so long. So that's why I said I'm not very convinced with discount at all. One thing which I would like to see here is, see, one count is very clear, which is that if the market takes out 31,620.30 level, basically this high level, then we'll look for longs. And on the downside, again, have an alert at 28,832, but I'm not really sure what count this is performing. So if I do decide to go short, it will be very minor positions. Overall, I think Bitcoin is a leave right now and wait and come back later to see if there is any clarity kind of market. So I will not do any more commentary on it. You possibly get the idea that I generally don't want to trade this market right now. So that was all for our quick discussions. And lastly, again, if you want to become a part of our Slack private group, where I post my market updates and trades, etc., etc. This is quick look inside the group. Then you can send your inquiries to 50is.com/contact us. This is the URL and subject matter requesting details for Slack private group. That's about it for this discussion, and I'll see you guys in the next one. Thank you. And yeah, guys, before I close it, do not forget to sorry, do not forget to hit the like and share the webinar. That is very important to continue doing these webinars and bring more quality content. That's about it, guys. See you in the next one.